Well, joining me on the couch this week, Mike Mangan, Portfolio Manager at 2MG Asset Management, Sydney Morning Herald business columnist Liz Knight, and my colleague and co-founder of the online publication Business Spectator, Robert Gottliebsen. Welcome to you all. Now, ANZ came out with its always last now, or at least it was this time, on Friday with 37 basis points cut. We've got a graphic here of where they all stand now, and NAB's still at the bottom, and ANZ at 705. So I just wonder where you think they how they come out of that all now.
I think it's fascinating. They've clustered again. It's sort of a bit reminiscent of the old days when they were all sort of moved together. Now they've moved into this very sort of tight cluster. In the same order, we've got Westpac still as the highest and NAB as the lowest, and the other two sort of like to sort of shadow box each other in the middle. But one can see, perhaps as Cameron Klein said, an interesting part is they've come down to him now, especially the Commonwealth Bank, which suggests that the Commonwealth Bank may be starting to try and grow its loan book again, having sort of stood out of the market a little bit over the last 6 months.
The Commonwealth's the only one whose results we haven't seen yet. All the others are struggling. What do you think the Commonwealth's going to look like?
The expectation is the Commonwealth will probably be the best of the four of them, but again, we haven't seen that yet.
And certainly, they generally are.
Yeah. Yep. History would suggest they have been in the past, so it'll be interesting to see how they come out, but certainly they seem to be getting a little bit more aggressive there on interest rates.
Why would Commonwealth be the best?
Two reasons, Alan. Firstly, they invested in their technology. They have the best consumer technology of any of the three banks. The NAB is investing heavily now, but it's some years before they get a benefit. And secondly, they did something on Friday which was absolutely dramatic. They slashed their deposit rates, their term deposit rates. The full Monty, the full 0.5%. None of this business of...
Westpac had already done that, hadn't
No,
it?
not by as much. But the Commonwealth, on Thursday, the Commonwealth was the highest. I was about to tell people that they should put their money into the Commonwealth, checked it on Friday morning, and bingo, they'd gone down. So when it comes around to the next rate cut, Mr Commonwealth Bank, you cut your deposit rates. Now, that's a gamble, because it's self-funded retirees who are supporting the switch from overseas borrowings to local borrowings. And my inclination is that once you put a 4 in front of the rate, say 4.9 or 4.95, once you do that, you'll start turning off those self-managed funds. But the Commonwealth, they haven't done that. They've gone to 5 in most of their rates. So it's a real interesting test of the market.
They're all struggling a bit. I mean, the competition for deposits is crimping their margins. They've got low growth. Are they good investments still? This is the question.
Well, Alan, they're yielding 6 or 7%, 6 to 7%, fully franked. So you gross it up, you're getting about 10%. Plus they're growing sort of 2, 3, 4% per annum. So that's a 10 to 15% return. I think that's pretty good. And there's a implicit government guarantee. If there's a GFC environment out there at some point, we know the government will come in and save it.
It was explicit in 2008, wasn't it?
Exactly. So I think they're pretty good investments. And the results we saw this week, the earnings per share forecasts that the brokers put out have not changed that much. Up 1%, down 1%.
The quality wasn't quite there. They were getting a lot of trading income rather than growth in their loan book.
Sure.
Which probably doesn't make them quite as... I mean, obviously they're very robust results, but they look perhaps a little better in growth terms than maybe they are in an underlying sense.
Hey, Mike, if those term deposit rates keep carrying down, self-managed funds are going to take their money out of the deposits and put them into your bank shares.
Sure.
And if they do that, then the banks have got a problem, because they've got to go overseas and borrow the money at tough rates.
Well, they're only
a real game to be played.